The market whips us around again, rallying before the Fed and selling after the Fed. Is the whipsaw over? Find out next on Invest with Jacob. All right, guys, so in typical Wave 4 fashion, the market whipped us around again yesterday, but it really wasn't that unexpected. If you watched yesterday's video, you'll know that my preferred path based on the structure was an ABC move up with a bigger move down to complete bigger Wave 4. Now, we didn't get exactly what I was looking for, but it does give us a lot of clarity, and we're now tracking two paths. I'll get into all that in just 1 second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. Okay, guys, with the move higher before the Fed meeting and then the sell-off after the Fed meeting, it gave us a little bit of clarity on what we're looking at. We either have a direct move down or one more leg higher before that direct move down. So let's jump into the charts and take a look. Okay, guys, here we are on the 5-minute futures chart, and we're zoomed in today because, again, everything we need to know is happening in this region. So we're really concentrating on this region right now in a zoomed-in fashion to see how we're going to play out the rest of this Wave 4. So we're down to tracking two paths right now. And you might be saying, Jake, how are we tracking two paths? Yesterday, you said if we got an ABC up, we should head down directly in Wave 5 to complete Wave C and ultimately bigger Wave 4. And that is true, and we are basically doing that for now. However, there are some things in here I don't like, so let's talk about these paths. So let's start with the path that kind of traced out today and see where the issues are. So down here off of Wave 3, we got our A wave up. That doesn't change. And then our B wave we thought would come down further, where I have this B here down to the 4266 area, 4250 area. But we didn't get that, so we would assume that this low is the B wave down, okay? And then the C wave you would expect based on the 1.0 extension would hit 4476. We missed this target by 30 points. We missed this target by like 20 points. And I don't like this structure at all. This should be more of an impulsive structure for a C wave up, and it's really anything but that. However, we did get an ABC structure, and we are heading down as we speak. However, I personally think this counts best as an expanded B wave here and not all of the move. Okay, so in that case, you would get, this would be A of B here, which we thought that yesterday. This would be an expanded B of B here. And then this would be C of B down here to complete this wave B. Then you would get the C wave up towards this 4480 area like we were looking for. And then finally back down in this wave 5 to complete the bigger C and the bigger wave 4. So the other issue I have with the red path here, the A, B, C, and moving straight down in 4 is you can see on this low right here, we had a really deep move in the MACD. And then we made a much lower low here and had really nice positive divergence, and then even made another low and had another positive divergence on that. So we're seeing the MACD turn up on positive divergence on these lows, and so I think we might get one more spike lower towards this 4250 to 60 region, and then get this bounce in C. However, if they're able to move down through 4250, then it's very likely we're headed down to complete this wave 5, and this bigger wave C and this wave 4 down to that 4175, 4150 region for the bottom of the big wave 4. That's how it's counting right now, guys, and 4250 is really what we're watching tonight. So the difference in the two paths, guys, and what we're watching is 4250, okay? At any point, this could be the bottom right here and go up, and that's a perfectly acceptable B wave down and rally up in this C, or we could come down as low as 4250. However, if they break 4250, then it becomes much more likely we're heading down to that 4175 to 4150 area to complete this bigger wave 4. Guys, if you like the information that I put out in these videos and you want real-time market updates from me, you need to get in my Facebook group. There's a link down in the description. Go ahead and click that link and it will bring you over to Facebook. Now, once you get to Facebook, you do have to get approved to get into my group. And the only thing that I ask is you hit that subscribe button on my YouTube channel and subscribe to my channel, and I'll get you into Facebook. You're going to want to be in Facebook this week, guys. On Sunday, I have a major announcement. I'm doing a Facebook Live at noon Pacific time. So I really hope you can join me for that. But you have to be in my Facebook group to join that Facebook Live. It's going to be a great announcement. So I hope you guys can make it over. So once you get into my Facebook group, to get the most out of it, guys, hit this featured button right here in the middle, scroll down, and you will see a link to my documented trades. You will also see a link to my Slack channel. Now, Slack is a free chat channel, and I am on there all day giving real-time market updates answering all of your Elliott Wave questions, and giving out my buy and sell alerts. It's an extremely talented group of traders, from the very expert to the very beginner. It's an awesome place to learn or improve your trading. All right, guys, so come on over. Let's make some money together. Key takeaways for today, guys. 42.50 is the key. If they can hold that and bounce, then we could be headed towards 44.80 in this C wave. If they cannot hold 42.50, then it is likely we are headed down more directly to complete this bigger wave 4 in that 41.75 to 41.50 area. All right, guys, that is the market update for today. I will talk to you tomorrow.